what if the struggle over $210 billion in frozen assets is actually the real story, revealing, a dangerous collapse of financial trust and just sheer desperation across Western capitals? We're doing a deep dive today into a financial conflict that really goes way beyond geopolitics. It's pitting the European Union against its own independent central bank. And now, suddenly, both of them are competing with a fiscally stressed United States over the very same pot of frozen Russian money. The EU is, let's face it, running low on funds for Ukraine, and it sees these assets as the solution. But grabbing them creates this massive, unprecedented international legal and financial mess. So the mission today is to unpack this high-stakes gamble. How far can the EU actually go before they shatter global confidence in European financial stability? And what are the immediate painful consequences that are already hitting bond markets in, say, Paris and Berlin? Before we go further, make sure to hit subscribe and support Credvia. Okay, let's unpack this. To start, we need to clarify the players. The EU is the legal custodian of, roughly $210 billion in frozen Russian central bank assets?
That's right. Since 2022. And your word, custodian, is key here.
Right, they aren't supposed to own the money. Their job is just to guard it.
Exactly. They're supposed to guard it. But now, because of this severe financial pinch, the incentive to use it is becoming overwhelming.
And that's the powder keg.
It is, because everyone knows the major legal risk here. If a peace deal ever happens, Russia will demand that money back immediately. It'll be a non-negotiable part of any deal.
And if the EU has already spent it or, used it as collateral?
It's an outright violation of international law,
Yeah.
a massive international embarrassment, and it would trigger just unbelievable legal challenges.
So it was that fear, that need for potential repayment that led the EU Commission to go to the European Central Bank, the ECB.
Yeah, they formally petitioned them.
And they asked for something just insane, a 140 billion euro backstop for the Euro Clearbank.
Which is the institution holding most of the assets, yeah. It's essentially the world's safe house for securities, based in Brussels.
So this was basically an attempt to shift the entire financial risk for this political decision onto the central bank.
And the ECB's response was swift and very, very clear.
A hard no.
A hard no. They understood that a guarantee that large would fundamentally violate their entire mandate. It would compromise the whole financial architecture of the Eurozone.
Why specifically? What were the core reasons?
Well, there were three. First, a guarantee that big creates an immediate inflation risk. It forces the ECB into a policy trap. Second, and this is probably the most important part, it would cause an immediate sharp loss of central bank credibility.
Because they're no longer independent?
Precisely. If a central bank starts acting as an insurer for political asset seizures, its entire function changes. It's no longer independent. And the third reason, which President Christine Lagarde pointed to herself, was violating the treaties. She said, and this is a direct quote, "We have to respect the Treaty of Europe in relation to the functioning of the European Central Bank."
That's the absolute red line, then.
That's the red line. The central bank will not break the treaty to solve a political funding crisis. Full stop.
Okay, here's the twist. Because the fallout from even thinking about using these assets goes way beyond Brussels' internal drama. This is now about global financial stability. It's about what it means for anyone, anywhere, to hold European sovereign debt.
Right. We shift from internal policy arguments to, outright legal warfare. Russia's top officials have already put it out there. Taking the assets, or even using them as collateral for a loan, will result in 50 years of litigation.
50 years.
50. This isn't just a diplomatic protest. This is a clear threat to mire the entire bloc from Euroclear to national banks like the Bank of France, even the ECB itself, in a generational legal battle.
Designed to just drain their resources and credibility.
Absolutely. It's a strategy. And as many analysts have warned, this action will inevitably boomerang back on the euro, the ECB, and sovereign risk.
So now think about this from another perspective. If you're a major sovereign wealth fund, let's say you're a pension fund in Japan, or the State Bank of Saudi Arabia, or China. You're holding billions in European debt, German bunds, French OTs. Yeah. How do you see that debt now?
You see a Russia 2.0 situation. That's the phrase people are using.
Meaning your money could be next.
Exactly. If the EU, which has always been defined by its commitment to rule of law, is willing to just toss aside international property rights for a short-term fix, well, then the entire risk calculation for holding European assets just changes overnight. It signals that sovereign assets, which were always seen as untouchable, can suddenly be seized because of a political fight.
So the moment you park your money in the Euroclear system,
You realize you could be next. Your assets could be frozen in some future conflict.
and we are already seeing this play out, right? I mean, long-term bond yields in Germany and France are climbing,
They are, and that's happening even as the ECB is signaling rate cuts, which should be pushing yields down.
which means the market is pricing in this new risk.
Precisely. That upward pressure is the market demanding a higher return, a higher yield, to compensate them for this new political risk. And that translates directly into higher borrowing costs for businesses, for governments, across the entire real economy in Europe.
If this perspective feels useful, take a second to subscribe to Credvia. It genuinely pushes us to keep bringing more research stories. So this desperation in Europe isn't just an abstract idea. It's rooted in a really difficult economic reality. Why are they so desperate to get their hands on these assets?
Well, because major EU economies, including the big ones, Germany and France, they're in a severe industrial slowdown,
They're importing expensive energy from the US, their trade surpluses are collapsing.
especially in things like manufactured goods and chemicals. They're structurally constrained. They simply cannot afford to issue tens of billions more in sovereign debt for Ukraine, not without destabilizing their own bond markets, which, as we just said, are already shaky.
And the liability issue here is just staggering.
It is. If the EU Commission uses the assets and Russia demands repayment, Brussels can't raise that money on its own.
So it falls to the member states.
It falls to individual countries. Highly indebted nations like Italy and Spain would suddenly be on the hook for tens of billions. They'd have to either raise taxes on their citizens or borrow even more money, which would just pour fuel on the fire of their own rising bond yields.
So in this climate, EU Commission President Ursula von der Leyen comes up with this very complicated workaround, the reparations loan scheme. Can you just break down how this is supposed to work? Because it seems designed to avoid saying the word confiscation.
It's a convoluted legal instrument. It's all about creating distance from direct seizure. The plan is to take the profits and cash balances that the frozen assets generate, a few billion a year, and move them into this new thing called the reparations loan.
And that cash goes to Ukraine.
Right. But here's the key. Ukraine only has to pay this loan back if and when Russia pays reparations for the war.
So it's a glorified payday loan that might never have to be paid back.
That's a good way to put it. The intent is legal gymnastics. They want to avoid the charge of confiscation by saying, look, we're not touching the principal, only the interest.
But it's still Russian property.
Of course. And most serious financial observers see right through it. It still compromises the entire system, just with an extra complicated step.
And while the EU is tying itself in these legal knots, Russia is making it very clear what will happen. Dmitry Medvedev called it tantamount to war.
And he promised the harshest response possible. And this isn't just talk. It's a drafted, ready-to-go counter-confiscation strategy.
We've seen them do this before.
We have. The legal framework is in place. They seized Carlsberg's operations, put them under new management, sold them off. But the really big targets, the sitting ducks, are the major EU banks still operating in Russia.
Right. Which banks are we talking about here, and what's the actual threat?
The biggest example is Raiffeisen Bank. Huge presence. Over 10% of its total assets are still tied up in Russia. They're already facing fines. One EU bank was just hit with a $2 billion fine. But the ultimate threat, the systemic one, is debt jubilee.
A debt jubilee. What does that mean in practice?
It means the Russian government, with the stroke of a pen, could just cancel all outstanding debts that Russian companies owe to EU lenders.
So if Raiffeisen is owed billions by Russian corporations.
Poof. That capital is gone from their balance sheet overnight. It would wipe out huge amounts of foreign capital. It could potentially destabilize the entire bank.
And it's not just banks.
Not at all. We're talking about vulnerable EU companies across so many sectors. Food, apparel, chemicals, energy, all still operating there and all facing immediate retaliatory confiscation.
Okay, so now we have to pivot to Washington. Because while the EU is fighting with its central bank and fending off Russian threats, the US has basically stopped the funding. The timeline tells the story. The last big chunk of money, $27 billion, was in the fourth quarter of last year. Then it dropped to $500 million in Q1 this year. And in Q2, the money stopped. Completely. The U.S. gravy train has hit the end of the line.
And the reason for that is entirely domestic. It's financial. The U.S. fiscal situation is, frankly, horrible. We are talking about historic levels of borrowing. In just the first half of 2025, the U.S. is projected to borrow nearly $990 billion dollars.
Almost $1 trillion in 6 months.
And that's set to go up to $1.15 trillion next fiscal year. They are adding hundreds of billions to the debt just to stand still.
So for Washington, every dollar spent abroad is a dollar they can't spend at home.
Exactly. On critical priorities. Repairing supply chains, rebuilding decaying infrastructure like their power grids, which is a national security issue, and crucially, funding the tech race against China in things like AI. The domestic fiscal crisis is forcing a massive priority shift.
Okay, but here's the really complex part. Not only is the U.S. done with the direct funding, they are also reportedly lobbying EU countries to block the European loan scheme. Why would Washington actively try to derail its allies' plan?
Because the U.S. has its own very detailed, very competitive plan for that same frozen Russian money.
So they want a piece of the pie.
They want a piece of the pie.
Yeah.
The U.S. has a 28-point peace plan that centers on using these funds. Their proposal says $100 billion of the frozen assets would be used for rebuilding Ukraine.
Okay, that sounds reasonable on the surface.
Yeah.
But there's a catch.
The very big catch. The U.S. plan specifies that Washington would take, wait for it, 50% of the profits generated from that $100 billion.
50%, that's not foreign aid. That's a business venture.
It's an unprecedented level of profit capture. Usually these funds have oversight. They're not structured like an investment vehicle where the country in charge takes half the returns.
So it's a financial services fee dressed up as foreign policy.
That's one way to look at it. I mean, the generous interpretation is that it's cost recovery for the risk they're taking.
But 50% is exceptionally high for that.
It is. And there's more. The U.S. plan also says the rest of the assets would go into a separate U.S.-Russian investment vehicle to fund joint projects, most likely focused on strategic supply chains, like for rare earths in the Pacific.
So what this really confirms is that everyone wants a piece of this $300 billion pie. It's not a unified front.
Not at all. It has created this messy competitive situation where the Western powers are effectively fighting among themselves over how to carve up these assets.
So to bring this all together, Europe is broke. Its central bank is refusing to play ball. Russia is threatening 50 years of legal war and is ready to seize EU assets.
And the U.S. has not only pulled its funding, but has its own competing plan where it takes a 50% cut.
It's a mess.
It is. And if you connect it to the bigger picture, this whole crisis over these assets, it signals a deep structural failure. It shows a global collapse in trust, specifically trust in the West's financial institutions and the rule of law. And that fundamentally changes how the rest of the world views holding assets in the West. That's a risk far, far greater than $210 billion.
So what does this all mean for you, the global investor or citizen? If major world powers are willing to dismantle the sanctity of sovereign debt and international law for a short-term financial fix, what fundamental assumptions about the safety and stability of our financial systems do we now have to challenge going forward? So how do you see it? Drop your thoughts in the comments. And if you haven't subscribed yet, join Credvia so you don't miss the next insight.